All right, so we talked about support and resistance during the class. So let's quickly try to set up one. Now, support and resistance, they are lines that tells you that, okay, this is the lowest point that the market will get to, and this is the highest point the market will also get to. Where do you use support and resistance? You use them in a sideways market, then you wait for breakouts. So for instance, now I have identified my support, which is the lower line here, and my resistance, which is the upper line up here. Okay. Now, as you can see, there is a green candle that is trying to break the resistance level up here. This green candle, if it successfully breaks it and proceeds out of the line, I'll buy. Okay. If it's the other way around, if it breaks the support level down here, I'll sell. It's a very, very effective strategy, especially for beginners. Okay, the only thing with the strategy is that it requires you to wait patiently in the market. You need to wait. Once you have identified your support and your resistance zone, you need to wait patiently until there's a breakout. What is a breakout? Breakout is when the candle, you can see the green candle is going up again. If it exceeds this line that I drew here at the top, I'll buy, which this line up here is called the resistance zone. If it goes below and breaks the support level here, I'll sell. It is that simple. So let's look for an ideal market and try to implement it. By the way, we have high volatility today, so I'm going to be using, okay, let's stick to 30 seconds and then look for a sideways market. I'm sure you're wondering what is a sideways market. Let me tell you what a sideways market is. Now, if you look at this previous point in the chart, this is called an uptrend. You can see clearly that the chart is going up. It's called an uptrend. Now, this indicator, you can see these dots under the chart. It's called parabolic stop and reverse. The parabolic SAR, when it prints at the bottom of the candlesticks, it tells you that this chart is going up. And if it prints at the top here, it tells you that there is a possibility that the chart is going down. And you can see there's a little bit of turning here. There's a little bit of break, as if it's going down here. So that's what it does, this parabolic SAR. The second indicator that I use is called CCI. CCI is the short form for Commodity Channel Index. This is called CCI. You can see this line here at the bottom. It's called CCI. It is one of my favorite indicators. It is very, very powerful. Okay? CCI works in such a way that when this line you can see here, when the line is around 100, you can see there's a plus 100 and there's minus 100 zone here. Now these zones, if the line is close to plus 100, the tendencies of the market to proceed in an upward direction is high. And you can see we are actually in the zone of plus 100. That's why this candlestick is struggling to go up. Now, if it comes down, as you can see, it's going down. It's proceeding downwards now. If it heads towards minus 100, it's an indicator. It's an indication that the market will proceed in a downward direction. Okay, so I use this CCI to confirm whatever I am seeing here. Do you understand? So if the candlestick approaches the resistance level, I'll look at the CCI. Is the CCI also at plus 100? Yes, it is. Okay, then I'll wait for a breakout. If there's a breakout, I'll buy. If it's the opposite way, likewise, I'll sell. I hope you understand. So, like I said, the thing about this strategy is that it requires you to wait patiently for a breakout. Okay? So let's wait and see if this bullish candlestick is going to break this resistance level up here. All right, so let's be a little bit patient. You can see it's struggling to break it, but there's a rejection. The rejection pushes it back down, and I told you that when there's a rejection, the candles will form a wick. You can see the wick there, like a spike. So let's buy and see. You can see there was a breakout, right? But like I said, the market is extremely volatile, so there are chances that it could reverse back. But this is the concept behind the strategy. You wait for a breakout and then you buy. Are you seeing it practically? It's that easy. And in 30 seconds, I'm going to make another $100 extra. Just like that. All right. So this is how you use the strategy to scalp the markets. I hope you understand. You set your support and your resistance level, then you wait for a breakout. And the breakout happened, I bought, and you can see, like I said, I'm not a wizard, I won. Okay, so it's a strategy. You just need to understand the market, know how it works, and you will constantly make money. You can't go broke. All right, it's easy. You withdraw your money and you spend it. They pay you in naira with the current exchange rates. So, um, now that we have taken one trade, let me explain again. Let me explain